I am long pound USD. So let me go ahead and do a little bit of an update on this. I am long pound dollar. I had a little bit of a tough time yesterday trying to figure out where I was going to trail a stop because I used market structure to trail stops. I entered this position earlier in the week, and then price jumped from here, and I was looking for a stop trailing point yesterday. I liked the idea that this had broken out with a lot of conviction. And while this is pulling back, I'm happy to kind of be nimble with this to a degree. Like I'd be fine if it does pull back further, as long as it doesn't break support here. That's a 61.8% retracement from yesterday's really big move, or the last few days really big move. So I'm happy to hold on to this one. Again, pound USD, I am long, have been long. So we'll keep a close eye on this one. And this kind of goes in line, by the way, with the S&P 500 trade that I'm still in as well. It mirrors the risk on effect. A large part of why I've been so risk on oriented is mostly my bearish idea on the dollar, which has played out pretty well this month and last month. We've seen, again, yesterday we got kind of more solid confirmation. We had a Fed sort of change its narrative over here. We talked about it continuously for like 2 weeks straight. But then yesterday we got more of the same, which really confirmed the idea. Seems like the Fed is not only done with rate hikes, but they're now addressing the idea of rate cuts. So the dollar index is falling, and I think it's still set to continue to fall. Right now, I don't see conditions that really dramatically change this thing bullish. The whole story behind the dollar narrative to the upside was rate hikes, right? Rate hikes as a potential threat on the horizon was the driver for that dollar bullish trend. And if you've watched for a while, if you've been on the show, then you know that at one point we were very dollar bullish. At one point I was very dollar bullish. And then, you know, as things kind of changed, we shifted into the bear camp. And I'm certainly glad that has been the case, because it's been a lot of pain for the dollar bulls recently. Speaking of dollar bulls, the bulls are having a little bit of a run here this morning. Euro rejecting off of this 1.10 level. Very interesting. The psychological level reacting here. In terms of the euro, though, again, this is a daily chart. Context here overall, still strong uptrend. I'm happy to continue staying bullish on this one overall. I think, you know, if you're looking at euro, the next sort of stimulus package, if you will, for the bulls, I think would be a break and retest of this structure here. We've hit target in terms of where we thought price would go, right? Retesting this previous high. And it seems like we're getting a little bit of a reaction so far to that 1.10 level. Someone in the audience pointed out that the Fed seems to be not as much interested in rate cuts. And I just wanted to clarify something for maybe people who saw that message. Thank you for bringing that to my attention. I believe it's Mitchell who said that, Mitchell Flats. We aren't really talking about rate cuts right now. So let me just clarify something when it comes to Fed speak or talk or any sort of commentary from Fed events. The Fed is made up of people, and people have opinions. So despite this person coming out and saying we aren't really talking about rate cuts right now, I just have to say that within the Federal Reserve, Jerome Powell is not the only person that makes any decisions, right? There's a committee, there's lots of different people who participate in making the decisions about rate cuts, rate hikes, rate holds, etc. So I just want to say, you know, you might get a little bit of volatility off this. We point out the dollar's up just a little bit. It's not up to any one particular person. Of course, Jerome Powell would be the most sort of powerful in moving the markets. But this is, we aren't really talking about rate cuts right now. He said on CNBC's Squawk Box, we're very focused on the question in front of us, which, as Chair Powell said, is we have gotten monetary policy to a sufficiently restrictive stance in order to ensure the inflation comes back down to 2%. I'm sorry, have we gotten? So that's the question in front of us. And I think, again, you get a range of thoughts and opinions. And again, he doesn't necessarily speak, Fed Williams does not necessarily speak on behalf of the entire Fed. So you do have opinions within the Fed that might be more or less hawkish, dovish, etc. Anyways, Kenzo, sorry for that. I just wanted to clarify that thought for people who may have wondered what that little blip was about in terms of Fed rate cuts. Kenzo, what's going on? I guess
Yes.
last time we spoke, we had seen some news, but we've had more since. What's your latest take on what's going on in the markets?
Yeah, the market has been great this week. So Powell just confirmed everything. So we are continuing on that bullish momentum. So they might not really cut 3 times, but that actually shows the good news. As you said, that it's a committee in the Federal Reserve. So it's a committee, they vote, whether some they will disagree, and unfortunately some they have the platform to go and answer some questions, maybe on CNBC or maybe Bloomberg markets. And when they ask them, they will just say, no, it wasn't a good idea for him to say we're gonna cut rates.
Right. There's
But
opinions
in the
in there.
committee, they believe that it's a good thing to cut. Yes, you see. So I believe in him, Powell, not the other ones. So since he's the one who is the governor, so I will just follow him. And beside that, obviously the data or the figures that they've been released for maybe 2 months now, they've been going down in favor of the rate cuts. They might not really do that in the first month of the year. Maybe let's say January, February. Maybe they might start it around maybe later or around maybe June, July, going further. But as long as we have that hope, I'm thinking about continuing with the uptrends, especially on mostly the pairs that are going against the dollar.
Yeah, no, that I like that concept. I mean, you have pretty much something that I wanted to bring up, Kenzo, is we talked about gold a good bit the last time you were on, and we talked specifically.
Yes.
I still got my chart marked up from our conversation. We got way more than we thought. I think it's a fair thing to say about the from what we heard from Jerome Powell. We had the introduction of rate cuts, which when we were speaking, mentioned that I did not think he was going to say. I thought, we'd be kind of, we'd be lucky to see him say something like, we're done with the rate cuts, rate hikes decisively. I was kind of hoping for that. We got more than that. We got, hey, rate cuts are kind of on the table now. We think, 3. So I think that gave us, in contrast to what we said before, with what we see now, we pointed out that a good dovish tone could set up a breakout for gold. And we did, in fact, get that. The question is today, gold is pulling back off the highs. It's pulling back a little bit. Is it time now to look at gold a little bit more seriously? I mean, as you mentioned, we pretty much had a perfect Fed pivot moment. You couldn't have asked for a better sounding Chair Powell. And then you also had all this data recently that has complemented as well. Is it time to look at gold a little closer? What do you think?
Yes, not only gold, but what we can say now, don't mind all these sort of rejections. That is part of the market. The market won't just run straight up. So the market will actually run, breathe. But at the end of the day, we know that we are on an uptrend. So we're going to have some smaller economic news along the way. Sometimes the market might push lower, but at the end of the day, we are still going to go up. I think maybe in 2 months, we will be talking about different number on gold or any other pair. We might be maybe on 2005, maybe going to a new record. But what I like is it's out there. He said there is a chance for them to cut the rate, even though it's not really happening now, but that is a good thing. And that shows the recovery of the economy. So I see a long-term buy on this. You see? So yeah, on gold, I'm very bullish. Unfortunately, where we are, I can't just buy there. I will wait for a retest, or maybe for the market to break that level, then I will continue buying.
Yeah, and I like your patience on that too. I think it's almost like following through with what we began our conversation with a few days back. We talked about, okay, we need Jerome Powell to have some dovish narrative. We need to see that we can actually draw some conclusions from the cooling CPI data, cooling PPI data. Like, we need to see the confirmations in the Fed speak. We got that. So now the question is, on the price action side, you've had these big pops. I think, in my personal opinion, a pullback on gold is an opportunity that I will definitely be looking at close myself. If we get a retest back at 2000, I think that at this point now is a lot more attractive than it was a week ago at 2000, because again, you've got now a confirmation and now a little bit of, you made a really good point there too about the ECB and Bank of England. We did get some numbers from the PMIs. We got PMIs coming out for the US as well today, but the German and French and UK PMIs, we saw pretty solid cooling in the ECB, or I'm sorry, in Europe. That of course could factor in again to sooner rate cuts. And as you pointed out, gold doesn't trade solely on the US and their rate cuts. It also looks to other major central banks. And if the ECB is going to start rate cutting, and perhaps at some point the Bank of England also joins the picture, joins the story, those are bullish catalysts for gold as well. I think I'm with you definitely. I like the idea of bullish setups. So we'll see if we can find them. And please, for the audience listening, I just want to add, as always, when we talk about a setup or an idea, there's no guarantees in markets. Markets are very difficult to predict. But the way Kinzer and I are analyzing this is our educated guess of what is likely to happen, but there's no certainties. There's a lot to talk about, Frank. Today we had one of the Fed officials say that March rate cuts are premature, but I was kind of saying earlier that that's just one person on the Fed making that point. They came on CNBC's Squawk Box and mentioned that rate cuts are premature. We're not quite there, and in my opinion, somebody was asking about that in the chat, and I want to get your thoughts too on this. Isn't it more important probably to pay attention to the chair who represents kind of the whole committee rather than just one person that kind of has an opinion? Would you agree with that, or what do you think?
Well, I think they all play a part, and what they all say means something. I wouldn't say that whatever Powell says goes necessarily, because he speaks for everyone. Right. So one person saying one thing and somebody saying another is, I think, just kind of how it goes. Yeah. I don't think Williams is wrong in saying that it's premature, because we've been seeing the expectations of rate cuts to be in the back half of the year next year. Mm-hmm. So saying a March rate cut is probably premature, but I think that hasn't really changed anything just based on what's going on right now. So the only thing that's changed was the topic of rate cuts was not even on the table up until Wednesday, when they were talking about entertaining the idea that there could be rate cuts at some point. And so now that it's being addressed as an actual thing versus not even in consideration is a very different shift in market sentiment, I would say. So I know he's saying we're not really talking about it right now, and it's important for the Fed to remain as cautionary as they are. Mm-hmm. So I don't think they're not as excited as investors are, because investors are waiting for that green light. And the interpretation from Wednesday was, okay, that green light is coming soon. And the one of the members, Williams, was just saying it's not a topic right now. I don't think it's not a topic, just because, Powell, he was asked that question and entertained it. Mm-hmm. Or he was asked that question pretty much at every meeting, and he was like, no, we're not gonna cut rates right now, and we're not looking at that. So
I think you made a really good point there too, Frank, because take a look at the two individually and their roles. Jerome Powell has a role where he has to be a politician to a degree. He has to speak on behalf of a room full of opinions. And so what he has to do is he kind of has to take a moderate approach and represent, generally speaking, the consensus, whereas an individual Fed member can have a different opinion and have a stronger opinion and voice it. It's kind of the, when you're the top dog, when you're the guy in front of the stand and you have to, speak on behalf of many different opinions, you kind of have to kind of shoot straight and narrow. Whereas an individual with a different opinion can kind of throw out his mindset on a more strong base that might be different from the consensus. So a good point. I think another thing to ask with that is, markets are flying right now on the stock market side. I know you and I have been watching the Russell a lot. The Russell is just popping like crazy, and the dollar is dropping. But the question is, do you think, if you're looking at this, let's say you don't have any positions on, I know you've got some Russell positions, I do as well. Overall, we are bullish indices, but let's say we don't have anything on. Is this a moment where you are saying this stuff is a little bit overdone? Are you buying, selling, holding, etc., when it comes to maybe the dollar and with the markets? What do you think?
I don't think it's done yet. I'm not buying anything, but I'm still in my positions. Like, I'm still in the S&P. I'm still in my UJ short, which got really close to my stop, but hopefully it has turned around from there, like has found a top, I guess. So
wait, can you real quick, Frank, on UJ, we got to update everybody because you just mentioned it. UJ, you said it came close to your stop. Did you trail a stop?
I did.
Okay. Do you want to just
I locked in close to 300 pips, but I think it's like 290 something.
Okay.
And yeah, price got very close. It's just above. Well, I guess let me pull it up. It's I think the 4-hour view is better. It's above these highs.
Mm-hmm.
So like just above this highest point on this 4-hour. It didn't come all the way up, but it came close. So I'm hoping that it doesn't keep going. This looks like this spike right here was kind of scary, I guess, but when you zoom out, it's just, consolidation, sell off, consolidation, sell off. It's just kind of a pattern right now of dollar weakness. So I think that's still going to continue.
Yeah, and I like something too about this, Frank. So for those of you guys who are just tuning in today, maybe you haven't been watching each day. First of all, you should subscribe and turn on notifications so you can hang out with Frank and I more often. But if you have not been keeping up with it, Frank sold dollar yen a couple days back. Beautiful trade in terms of you caught it like right before the big drop from the perfect, I think it was the best Fed day reported since 2009. So you sold it right before that. So that was a nice moment there. But Frank sold and is talking about trailing his stop just above market structure. And I also wanted to add one thing. You've trailed a stop and you've trailed it pretty tight. But I like the idea because, again, this market has made a really good push. It's probably a fair point to say, okay, we've kind of hit short-term targets, trail a stop in a little bit, lock in something just in case, you get a Friday reversal or something like that. So I like your trade there. And again, I've said I'm jealous several times, but just a reminder, I am still jealous of the UJ short. What were you going to say about the NASDAQ before I cut you off?
So despite of what is being talked about right now and how the discussion is not on the table, the NASDAQ doesn't really seem to care too much right now. It dipped for a little bit, but recovered pretty much, and now it's positive on the day. So I think that in terms of where it could go and how much farther it could run, it's still got a little bit left before it hits I believe those are its all-time highs at 16,765.
Mm-hmm.
So yeah, I'm not really looking at extreme gains from here, but I think there's still a move to be made, and if it does break that, then it's going to have to form another top somewhere, and then that will be the next target in the future. But this doesn't really seem like a move that wants to quit.
Yeah, and Frank, I just had a thought. I have to say it, even though it's behind the scenes stuff. TradingView indicator where you could track a trade that you're in a little bit. So let me just show you guys on my screen. We've tried to keep it a secret, but we keep talking about it anyways. Frank and we're working on some indicators for TradingView, which we've had a lot of fun doing. There's been some things, TradingView is wonderful, but there are things that we wanted to add, things that we wanted to build in. What if, Frank, you could get, and you kind of have it going with the one of the indicators you have on your screen right now. What if you could create an indicator where you select where you enter into a trade and where the trade either ended or up to current levels, and it drew a little bit of kind of like a stats bar for you without this thing? Because even though I do like the position indicator, it like dominates your entire chart. So what if we could create like a simple or like a more relaxed position tracking indicator? That might be a cool indicator to talk about. Anyways, off topic, but I just wanted to get it in out there because Frank and we brainstorm all the time. And if you let a thought go without thinking or talking about it, sometimes you lose it. So just wanted to say that. But do you see what I'm saying, Frank? Wouldn't that kind of be cool?
Yeah, I mean, the candlestick counter kind of does that.
Yeah, that kind of. Wait, show Frank's screen again, Chandler, because he kind of had something similar.
So this just tracks, if you're trying to look at like if a true trend is really going on, it counts how many green and red candles there are, and then it tells you how much it gained or lost in that period of time. So if you see like, say you saw like a bunch of green candles and then there were only a few or a handful of reds, and the greens outnumbered the reds, but the overall trend or the percent gain was still down, that's kind of showing that there wasn't really a trend going on. But seeing that the number of red candles here shows you 29 versus 21, so more green than red, and at the same time the percent change was 10.3% change. That kind of shows you that, so the green candles, when they happen, are more impactful than the red ones. So there's more upside than downside, showing that there's more candles to the upside, and those particular candles are moving harder to the upside than the red candles to the downside. It's a simple tool mathematically, and you can set it to however many candles you want to set it back to. So if you entered a trade, it wouldn't get your exact entry point, but it would show you from this candle's close to the current candle's price how much has it gained since then. So it's a good way to look at, well, is this an uptrend or a downtrend, or is it a true or false trend?
Yep. No, that's explained well. Thanks for that, Frank. And I want to turn to a question that I had. Now we're a little bit back on the countdown, I guess, to the PMI numbers. You were listening just before we had you join the call. PMI numbers. I guess, what are you looking for? If you're bullish, what do you want to see out of these numbers? What do you think?
At this point, I think I want to see them get higher, because anything under 50 is still contractionary. But just because, say it comes in at 49.7, we're still contracting, but we're beating expectations. So maybe slowing in the cooling of our economy, but nothing robust. Like, I don't want to see manufacturing come in at like 51.
So you want to see like a 49.7 print. Somebody clip that and see if Frank is right. But I'm not saying you're predicting it, but that would be nice, right? Because then you get still cooling, but you're not, but above expectations. Because at the end of the day, if you're somebody who's trading the indices, you kind of want to see, manufacturing and services still doing well, because, that would show that, output is still strong. but you also don't want it to be too strong because then it could be inflationary and, kind of slow down the rate cut conversation from the Fed. So it's
though,
confusing.
At the same time, a lower PMI doesn't really, I think that's the question, is higher or lower isn't necessarily the problem. I think it's how much higher, how much lower. So if PMI comes in as expected or lower, then it's still not really, in my opinion, it'll cause some sort of reaction, but I don't think it's necessarily a bad thing.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.